about 2 minutes late. All right, here we go. Hello, everybody. Welcome to the TraderMerlin Show for the Bizarro edition. The exact opposite, as Big Eb says here, the exact opposite of what we saw on yesterday's trading session. Some might call that a tweezer bottom, if you will, or maybe a dead cat bounce. We're going to talk a lot about today's current markets, but with a particular focus on something a little bit different. Now, obviously, we've looked at oil and some commodities on a regular basis, but today I've got a veteran with us from the oil floors out in New York, NYMEX trader. We got Mr. John Rowland joining us to talk about trading oil and natural gas. Mr. Rowland, how you doing?
Hello, Merlin.
Oh. Good to have you with us, man. I looked at the Skype call here. It looks like it's been like several months, 4 or 5 months since we had you on the program. I think it was more recent than that, but it's been a while. How you been?
I've been doing well, my friend. I've been hanging in there, doing a lot of work and trying to survive these markets, right?
Yeah, I mean, hell, this has got to be, right in your wheelhouse. I mean, you haven't seen days like this since, it's been, a good dozen years since we've had crazy volatility at the magnitude we've had right now.
Oh, for sure. I mean, and we're now, oil is close to what? Those peak highs we saw back in 2008, 2009, right? Before the financial crisis. So,
it was as of yesterday. With that nice
down 10% today or something.
Yeah, 11%. I think at one point it was down like 14%. But here I got the chart of it up right now. Crude oil absolutely just getting murdered today. But if anybody's holding oil long, today may look like a bloodbath. But let's be honest, if you go back to those December lows, you've gone from $60 up to 130. So you got a 100% rate of return. I'll take a 10% or 11% drop. Well, what's your take on all this? We keep hearing, oh, Russia this with crude oil and Russia that, and we're going to have sanctions, and you're seeing the price of oil rise, and of course everybody's pointing the finger at President Biden like it's his fault. Let's be honest, it's a summation of many different factors out there, and I got people on the show going, hey, it's going to 300, going 80. 250, 220. I feel like I'm on The Price is Right, and they're all trying to guess the price of the showcase showdown here. Give me your quick take on crude oil and maybe what you see has transpired and where you may think it's headed.
Well, I think I don't know who to blame, but except for maybe one person. The person that I would blame would be Jerome Powell. So I think just that trillions of dollars of liquidity is now just coming back and biting us in the ass. And, crude oil prices were on the rise well before this, the Russian conflict. So, I think it's just pure inflation. There's plenty of crude around the world. Going into before the COVID, one of the problems that crude oil was having was we had overproduction, and I don't see where demand has gotten out of line to justify, $125 crude. I think it's just comes down to the old too many dollars chasing too few goods, and it's pure inflation. Now, in the short run here, sanctions and, taking Russian crude off the market or, not allowing it to flow. I just think that is irresponsible. I understand the concept and about how to try to, bring them to the negotiation table. But, I think the only persons that it's going to hurt is, the poor third world countries and, you and I at the gas pump. So, in the short run, I think, we're the ones that are going to pay the price and not Vladimir Putin.
Yeah, it's just a big chess game, and I think we all understand that. And of course, the individual citizens will be the ones that hurt the most. And while obviously, I have a humanitarian aspect to me that says I feel bad for the individuals of Russia and Ukraine because of all that's going on, and I'd like to support and help out. But the other side of me is, hey, I'm a capitalist, and I need to take whatever political events happen around the world and say, how can I translate that into improving my personal situation or my financial situation? And I didn't have anything to do with these attacks whatsoever, but I have to look at crude oil or commodities, silver, gold, equity markets, and say, how do I optimize my portfolio for that? when you look at this crude oil chart here, it's been soaring, and obviously today was a pretty big pullback. We're still at $109 per barrel right now, but going back to those highs from 2008, we were up around the 145, 146 mark on it. That was all-time highs. From your perspective, what is the mindset of somebody who's a floor trader thinking as we get towards this historic all-time high level? Is it become a magnet to price, or is it more, a resistance towards price?
Well, I think it's both. I think it's a magnet to test it, but it also becomes like, that it can price survive. Will we have demand destruction? I mean, the reason why maybe when we talk about those all-time highs, what caused the fall? Well, I mean, I think it might have been a little bit of demand destruction, but it also was, you can really time it. That was really the beginning of the financial crisis. And so I think there's a lot of timing similarities between what's going on, what happened in 2008, 2009, and what is happening now. The market has been in anticipation of all this new inflation that's coming on and all that. And now what is the catalyst that I'm sure that you've talked about is that could drive the market? I don't know which direction, but I'm thinking that, if we're in a bear market, which it certainly feels like, all this has fallen on the anticipation of the Fed tightening, or not necessarily tightening, but, the quantitative easing.
Right.
And so I think the timing together is kind of eerie. And once we get a clear picture from the Fed, that might also have a clear picture of what is going to happen with crude oil. I would think the knee-jerk reaction is if the Fed tightens and takes away the combination, then I think we'll see crude oil prices come back to something that's a little bit more stable, maybe like in the mid $85 to $95 range, until we get a rebalance between supply and demand.
There's a question that came in from Rob, and I've addressed this from my perspective. Like, if I was OPEC or Saudi Arabia or one of these OPEC countries, Rob says, what point does OPEC start producing more because they don't want the price to get too high? If I'm one of those countries, I got to look at it going, the higher the price gets, the better, because I've got a fixed amount of oil in my country. The higher it is, the better it is. It's kind of like saying, Coca-Cola is going to produce more because demand is so high for its Coca-Cola product that, people are now not going to pay $1. They're paying $2 for it. Well, Coke can now maintain the same production and make $2 per can. And it's a basic example, maybe something we can all relate to at the stores. But, if I'm one of these OPEC countries, the only reason I would potentially want to be raising production levels is so I don't piss off the rest of the world, right? And granted, OPEC's not the leader. You got to look at Russia and you got to look at the United States as the leaders in the production area. But, I don't see OPEC feeling any pressure to increase production other than political. Do you?
No, I don't. I don't see. I mean, they literally hold all the cards right now, don't they? So yeah, I mean, why would they increase production now? One of the problems with OPEC is that they're flagrant cheaters, or historically cheaters. So
Yeah.
eventually, greed takes over. But I mean, in that sense, there's still a lot of other things that are supporting crude oil prices. And again, inflation, but in terms of economics, or global economics, I mean, up until just recently, I mean, the global economies were coming back pretty strong in that, demand wasn't going away. Now, again, if we have $150 crude oil and then, we go and, something happens, this conflict goes out, gets a little bit, escalates, and then we see, the European economies, go into a recession, or even if we have a recession here, which some folks are talking about recession or even stagflation because of what could happen with the Fed, then that's a different story, right?
Mm-hmm. Yep.
Right now, I mean, I think it's status quo.
Yeah, there's some good comments that came through on that. Thomasina said, yeah, no, in fact, they wouldn't even take Biden's call. I heard that today, too, and who knows the true story behind it. But, yeah, I don't feel that OPEC can really have any pressure there. And then Christy says, at some point, a sustained higher price will do more harm than good, but I could be wrong. I've been wrong often. Well, Christy, I think you're right. The higher it gets, obviously, I think there's some interesting things that come from a super high price. So let's say hypothetically, crude oil rips through these highs. We got more tension going on with Russia. OPEC still doesn't answer the phone, or maybe they just don't even have phones anymore. And we see $300 oil. At what point does a global economy say, well, screw this. Oil's too expensive. Let's focus all our attention on EV or alternative energy sources. So while it's bad from one aspect, it could also be good because it's going to force innovation in other areas of the economy. Now, that's assuming that this is a long-term price increase in crude oil. I don't think that this is going to be something that's going to last years. I think this will be, when this conflict is resolved, you'll see prices come back down to somewhat more normal levels. I personally think that if they're getting $109 a barrel right now, then they're going to try to keep getting 109 or more per barrel, but bring it back down to where the world's not complaining. What do you think, John?
Yeah, I mean, I kind of agree with you in the fact of this, mother of necessity is the mother of intervention, and that, if, that was always was the criticism about, cheaper or alternative energies, that they were too expensive versus, cheap crude. Now, some conspiracy theorists will say, that this is like the best case scenario for, green energy, right? I mean, people have been slow to adopt green energy because crude oil prices were relatively cheap for the last, decade or so.
Right.
And so is this escalating that conversation? Well, maybe it is. And maybe somebody who wanted, us to move faster towards alternative energies, well, how could you do that? Well, you make fossil fuels or hydrocarbons too expensive, and that forces people to do that. But I mean, I think it's kind of backfired because if you think about EV, I mean, you only have to look at, nickel. I think you did a nickel thing yesterday, but nickel, cobalt, aluminum, lithium, all of these precious metals and rare earth metals, I mean, they're at, they make the crude oil price look like a pimple, So, I mean, are you going to buy, or is it the common Joe going to buy a $100,000 electric vehicle? I don't know. I don't think so. I'm not going to buy a $100,000 electric vehicle, right? I'm going to hold on to my gas guzzle. I don't even care if I'm paying $5 a gallon. I just won't drive as much,
There you go. Get yourself back on that bicycle, buddy.
Bicycle, yeah, exactly.
Let's see, some great comments coming in here. Alvin says, John, do you trade oil mostly on futures and stocks, or do you have a position on crude oil right now if you're trading it?
So, I mean, I do everything. I will look at the futures markets. I don't play the futures market as much as I used to. I mean, in this last rally, and you can go back to our discussion we had last time I was on, and, I was in a lot of equities, some natural gas equities. I was in the Norwegian equity market, and their crude oil producer, Phillips and ConocoPhillips and Chevron were in my portfolio. Now, I'll be honest, in full disclosure is that in just recent days, literally part of my trade plan is I want to be as totally neutral to the market going into next week with the Fed. So I've been taking profits on all of them. As a matter of fact, this morning was I closed out the last of a lot of my bullish positions, my gold miners, my European oil, and all my call spreads and everything. I basically just closed everything out. So my timing was pretty good. I mean, blind squirrel finds nut. But so right now I'm totally flat to the market, both energies and precious metals.
So after we have this next Fed meeting, what are you going to be looking for to assess the play in crude oil? And we could look at natural gas here in a second, too, because I know you're an expert in that market as well. But what are some of the things you'll be looking for as a trade setup for you? Is it predominantly going to be technicals? Are you out sprinkling on some fundamentals? What do you look for?
Yeah, I think it's going to be a little bit of both. I think I'm hoping for a pullback, right? And I still think that the Fed is way behind the curve, and that even if they raise they do something drastic, which I don't think it will. 1%, right? Yeah, right. I don't think inflation is going to get under control until the Fed funds rate gets above, let's say, 3 or 4%. Unless we also have, global recession. So I still think that on a technical basis, I want to hope for a pullback. But on a fundamental basis, as long as some of these energy companies are, just ringing the register, and because there's so few of them left, and there's only like 3 or 4 really good ones here in the U.S., but all of that, the energy service sector, the drillers, everything, all these things, those things are starting to come back, so I will start looking, at those fundamentals, cash flow, sales, earnings, revenues, all those things. So as long as they're positive and they're growing, then I think I'll get back into the equities market. So
last time you were on, I want to say it was October. I have to look at the calendar, but there were a bunch of people who asked specifically, like, well, what are you looking for? What are you getting into? And you mentioned the oil companies, ExxonMobil and some of these, Chevron and things like that, as being great plays. Those have done remarkably well. Of course, that's going to go hand in hand. Here is ExxonMobil. ExxonMobil's chart looks absolutely phenomenal. And since that October point, let's see, September, October. So since October, it's gone from about 58 up to reach about $92 on ExxonMobil, and then I think CVX was the other one that you were talking about, which was Chevron, and that's still just ripping.
And the European one was EQNR. That was the old Norwegian oil state.
Equinor, and that's been absolutely gorgeous as well. So again,
I think when we
go ahead.
No, go ahead.
I think at this point, if you're still in those, I know you're closing stuff out because it's Fed announcement next week. You've had such a great run in those, so you got to question yourself, like, is this run really going to keep on going to the upside, right? You kind of had an easy play in October, and now as we get higher in that curve with crude oil, especially coming into all-time highs, it becomes a little more challenging to want to be going long at these levels.
Exactly. I mean, what's the old adage, right? Bulls and bears make money, and what?
Yep. Pigs get slaughtered.
Pigs get slaughtered, right?
Yep.
And so, I mean, if you've made 40, 50% in 4 months' time, I mean, if you don't take some money off the table, or at least execute some kind of plan to protect yourself to the downside, either buying puts or, selling covered calls, I think you're just, you're being bullish. So, I mean, yeah, I think at this point, for instance, like one of the metal plays, I had been long Alcoa for a long period of time, but I kept on selling covered calls above the market, and I was selling 5 to 10% above market, and the market was just continuing to rip through me. And so eventually, what happened was all my cover calls got exercised, and then my position was liquidated. But that's fine to me because I set a target, and then I set a cover call above that target, and so it was just added profit to the target that I want. Now, am I upset that I missed out on maybe the last $5 or $10? Oh, okay, so I missed out on that $5 or $10. But now you look at Alcoa today. I mean, it was down almost 5%, and it's now almost off 20% from its most recent high. So I don't feel so bad. You know, I mean.
Well, John, you've been doing this. You've been doing this long enough that I know that you don't look back on a trade and go, I'm upset that I got out of that one.
Especially a profitable one, right?
Yeah. Yeah, it's funny. I'm in a situation, the same thing on silver right now. I have a bunch of silver, and I've been selling covered calls against it, and I've been going, considerably out of the money, generating some extra premium, and it looks like I'll have my shares taken away from me. And it's like, okay, cool. I'm content with the profit. So, never look back and worry about money you could have made as long as you make some.
Right? As we go, okay, I made me profit here. Here you go. Help yourself. Maybe hopefully you have as big as profit as I do. Because you also know, as I know, that if you really like a market, you can always do what? Get back in, right?
Sure.
So
always. Let's look at another one that has been an interesting chart. We talked about natural gas a while back, and I think when you were on, it was one of those periods of time where the moves were just colossally large. You were referencing all sorts of different international markets and kind of how natural gas flows around the world. I'm looking at the chart right now on the daily. Here's the NG futures. I've got this trend line drawn under the lows that started back in July of 2020, and we're still respecting that great trend line. It's still bouncing, but lower highs over the past few months. What's your thoughts on natural gas going forward?
So I think we're coming into a new season. We're coming into the injection season as folks have to start replenishing their supply from this last winter season. We had a good drawdown, not an extreme drawdown this season that we had seen in, in historical drawdown seasons. But I think what we'll see probably is the volatility of natural gas will continue to come down a little bit. And I wouldn't be surprised in the short run that natural gas prices will pull back maybe into, I think, maybe 360, 380 on the downside. But, moving forward, and this was one of those equity plays that I told you about, was that as long as the European market remains tight, and again, what could happen with the conflict with Russia, we are producing a lot of LNG, and it's going direct to Europe. Now, not only do we sell LNG to Europe, but we're also selling it to into Asia. And there's a lot of companies that are ramping up production, and Cheniere is definitely one of those. And again, if you put up a stock chart of Cheniere since October when it came out, I mean, that stock, you thought Exxon looked good. Look at that stock.
Yeah.
I mean, it's absolutely ripped.
Yep.
So I think in the long run, right, even no matter what happens here in the U.S. in terms of crude oil prices and EV and green energy and all that, I still believe that the mega trend in natural gas is much, much higher over the next 5 years as we make the transition from hydrocarbons to renewables. And I think, in my opinion, it's going to be through the LNG market. And so I think in continuing to look at those equity markets and also looking for opportunities in the natural gas futures market. Now, again, I think in the short run, I think maybe the market needs to pull back a little bit. But I think the bar that we thought was down around $2 or $2.50 has now been raised to maybe, let's say, $3.20 or $3.40, and that bar is going to continue to raise as long as we continue to produce a lot of LNG and ship it around the world.
Actually, it's funny. I brought up the chart here. I got Rowland target for cold winter 10, 11, 21. So that was the last time you were on. That was up around $8, which we didn't get there. But given the trend that's in place right now, might not happen this one, but it seems to me that that's where the trajectory is headed as we feel like we've broken out of this, a 12-year kind of sideways traversing. And if we get above these highs at say 650, then yeah, $8 is going to be in play on that one as well. I don't know if you can see my charts over there, but
we got to what, 650, right?
Yep.
I mean,
close. We'll let you have that. All right. Well, tell me a little bit about what other stuff you got going on, guys. If you viewers out there, you have questions, feel free to type them on in. Big Eb says, John, can you trade any?
Hang on a second. I got somebody knocking at my door.
At least you don't have a Great Dane like I do.
It's my dog.
Oh, there you go. No worries. Big Eb says, John, can you trade any natural gas in the European markets?
Do I? No, I don't.
But can you? Like mechanism-wise?
Oh, yeah. I mean, there's ways to do it, but for the small retail investor, no, not really.
I mean, and I guess the question would be, why would you want to, right? Natural gas is natural gas.
Yeah, I think if you're going to play the LNG market, I mean, for instance, Cheniere, I think that's an easy way to get that play because their direct customer is European. Again, that NQ is they're like the second or third largest producer of natural gas to the European market behind Russia. So again, you're looking for a substitute. That would be a direct way to play.
What was the NQ ticker symbol?
NQ, EQNR, right?
EQNR, yeah. Yeah, there you go.
Right? So, and again, there are some issues with this. Their supplies come from North Sea, and they've been dwindling. They've been depleted. But again, they're still like the second or third largest provider of energies to the European continent. So, if you wanted to play a substitute trade, that would be, the one that I would look at.
All right. Let's see. Question coming in from Margaret. Margaret says, what does John think about trading USO, UNG, and UGA as energy plays? Wow. Obviously there's a bunch of different futures-based ETFs for commodity markets. And personally, I am not a fan of those myself, but just because of the way that there's price tracking errors in those. What's your take on those?
I agree. Especially the USO had some difficulties. In the past, they've gotten their act together. They're not so heavily invested in the short run in the front months, and they're a little bit more spread out. So I'm not a real big fan of them. First of all, they mute the volatility. You don't get a lot of bang for your buck. But for somebody who wants exposure to the futures market, who doesn't want to trade the futures markets, it's a decent substitute.
Yeah.
Again, gold goes up doesn't mean gold miners are going to go up as well, right? Or, if you're playing some of those ETFs that are, sector specific, that sometimes there's a little bit of a lag. Here's a great example. Now, this is one that I do trade. Boyle is a
triple.
Multiple, right?
Is it triple? It's triple
double,
long.
I don't know. I think it might be a double. I don't know. It's whatever. It's a multiple. That one tracks the natural gas market very, very closely. So that one I do trade. Okay, so that one is one that, if you didn't want to play the natural gas market. The oil one's not so well. Now, the other one that, you talk about commodities and we've been talking about energies, but I really think the next gold market, the next crude oil market is going to be grains and soybeans for sure, because soybeans are going to be another one of those transitions from hydrocarbons to green energies or renewables. Soybean oil is being used in biodiesel, and this is a global demand. And it's the same kind of way we saw corn back in 2008 shoot up as we went into the ethanol. We started to make that move towards ethanol. I think you're going to see the same thing with soybeans. But if you do WEAT, which is wheat, that one also shadows the wheat market, which is another one of the commodities that has been in the front page news as wheat. So I think those two markets, wheat and soybeans, are the next big commodity plays. I think the oil play is probably a little bit overcrowded, and maybe we need to have a little bit of pullback. And natural gas, we're coming into a little seasonal slowdown. But I still believe that in the long run, grains are going to be the next oil market, so to speak.
Well, it certainly has had a ton of volatility out there, and as people are asking here, let me bring up some of these ones. Katut says, what about pulp, which is the wood ETF? With all these, I think it's important to, right? Isn't it? Why am I not getting pulp on mine?
No, I think that one is wood. It's actually wood.
There is wood, but there was one called pulp. It's a good ETF. There's a wood one. And let's bring that back.
So a couple things you need to look for is, management fees, right? Like a regular equity, might only charge you like 0.5% or 0.6 or 0.7. A lot of these futures ETFs, they're charging, like 3, 4, 5%. The other thing is, we don't talk about this a lot, but you got to look at your market, your futures market, and if it's in Contango or backwardation. Now, what does that mean? Well, is the spot price cheaper than the back months? Or is the spot price more expensive than the back months? Backwardation.
Right.
So if it's in Contango where it's cheaper, what happens as your ETF rolls forward, it's selling out its position in the front at a lower price, and it's buying a new position at a higher price. So you're actually, as they roll, you're paying a negative dividend, so to speak. So I would be more likely to trade ETFs, commodity ETFs, where my market is in backwardations, where the front months are more expensive, which we're seeing currently now in crude. But 3 or 4 years ago, that was one of the issues with the USO. We were in Contango. And so what happens is, as they roll, they sell out the more expensive contract and they buy the cheaper contract.
Right.
Does that kind of make sense?
Yeah, I mean, the challenge there is you get these price tracking errors, and typically the longer you hold these futures ETFs, the greater that separation from the spot to the ETF becomes. So, for me, I'm not
in terms of where you enter the market. Yes,
correct.
Exactly.
Right. Yeah, you could go back, let's say 6 months, and pick even a 1-to-1 ETF like USO. It's not going to track oil perfectly. There will be a separation because of that rolling of futures products. So you'll lose a little bit. I think that, as John was mentioning, Boyle, that is a double long natural gas. With something like that, that's a great trading vehicle. These doubles and triples can be phenomenal trading vehicles if the liquidity is there. Just don't get caught holding those things for a long time, because every single day you're losing a fraction of a percentage of your profits because of just the time decay of these, the way the futures are rolled, etc. So I say stay away from them.
Yeah, I'm not a big fan of them, but again, sometimes, there might be a little bit, like you said, a seasonal trend, or maybe 2 or 3 weeks, or a swing trade. And for the retailer and trader, this is a really easy way for them to get into these markets without having to worry about, margin calls and volatility and limit up days,
right.
limit down
Exactly.
days. I mean, look at what we did just 2 days ago. It was limit up like 6 days in a row, and then it had literally a limit up day and a limit down day. What was that, 2 days ago?
Yeah, it was yesterday. It was in one day.
That range in price was equal to a $10,000 change for one contract. I mean, talk about your Alka-Seltzer Pepto-Bismol moment, right?
Yeah, right. I mean, that's well, in a bankruptcy moment. I was joking the other day. Someone was saying, what if you sold short one wheat contract right now? I said, you'd be nuts. Your lock limit up every day, and there were 2 actually days where there was literally no trading because there wasn't one person selling a futures contract on wheat, and I was thinking this could be one of the worst things that could ever happen to somebody, especially if it's near expiration, because it gaps up. You cannot get out. And again, everyone thinks that your broker will liquidate your position for you. They can't. There's no one to buy it
They
from.
can't get you out. How do you get out?
Right. So with wheat, John, real quick, with wheat we have it's a deliverable product. So if I'm long wheat and I carry it through expiration, and obviously my broker will most likely close me out, but in theory I would get delivered 5,000 bushels of wheat. But if I'm short and I'm lock limit up through expiration, I can't do anything about it, I'm going to have to come up with 5,000 bushels of wheat per contract to someone, right? You ever seen that happen in the commodities markets, deliverables like that?
Yeah, I mean, this is a very rare possibility.
Yeah.
What usually happens is we have price limits set to protect the market from these huge volatilities. But as we get many of the markets, as we get to closer to expiration, there is no limits.
Yeah.
There's no limits. And then what happens is then eventually price does find a way, and people get out. So, yeah, but there's no guarantee that you're going to get out, at a reasonable price.
Oh, you could lose everything and then some.
Yeah, the person is going to let you out and say, oh, you need out? Okay, well, here's the price. And then you say, well, no, wait. And then the next time you ask them to let you out, the price is now, $10 higher or $100 higher or whatever.
And
I have seen that happen, right?
Yeah, absolutely.
So the mechanics of the way the market is designed or the contract is designed, I don't think that could ever happen. And certainly as a retail and trader, I think, for instance, in grains, retail traders are forced out, something like 20 days before expiration because the brokers make them roll over. But,
right.
If you're talking about 2 commercial traders, then, again, it comes down to, who's going to let you out and how much it's going to cost you, right?
Yeah, and they know, like, if it gets near an if it's lock limit up every day, and I'm an institutional guy who's looking to sell some wheat, tomorrow my limit order is going to be, I'll be right at limit up. I'll know the calculation. So if it's lock limit up on Tuesday, when that market opens up for the next day, but let's call it Wednesday, I'm at the lock limit up number, because I know some people are going to be forced to buy right away, and I'm going to create that. I mean, there's so much little manipulation things that can be done with commodities, so you got to be careful. But I agree with John. I think that grains and agricultural products are going to be the next crazy volatile markets that everyone's looking to trade, and you just got to be careful with them out there.
Yeah, let me give you a quick story. I remember a time in propane. We had what was called a freeze-in. The weather was so cold in the west, and the main propane storage facility somewhere out in Oklahoma was frozen solid, and no propane was coming out. Now, not only is propane used for heating, at residential level out in the Midwest, but it's also, farmers also use it to keep their crops dry in their silos. So there's a lot of demand for propane in the wintertime. So what happened was the freeze-in came, and then propane started to go limit up. Now, it went limit up like 4 or 5 days in a row. Like you said, it just opened, locked, limit up, and no volume traded. Now, I happen to know a trader at the time who got some information just prior to the announcement that there was going to be these shut-ins, and got long propane. And propane shot up for like a week. Limit up, and not a contract changed hands. And now on Friday, I went down to him and I was like, hey, I'm calculating in my head. I know how many contracts he bought. I know he was up at like $250,000. I was like, hey, nice score. Are you going to get out? I mean, it's locked, limit up, but are you going to take some money off the table? And he's like, no, it's going to go higher, right? It's locked, limit up, right? Well, over the weekend, the weather broke, and the fire department in the local area figured a way how to heat water on a fire hose to get the valves to start flowing again. And sure shit, if the next day, on Monday morning, the market opened up, lock, limit down. Again, no volume, all sellers. Mm-hmm. And it went limit down, limit down, limit down. And this guy went from making $250,000 to losing $250,000. So again, another, when you have profits, and sometimes it's better to take profits and walk away, especially when you get these volatile limit type movements.
Yep, absolutely. All right, last one. Let me see if I can check my clock here. We'll make this in a quick one, and then I'll get to, I want to talk about bar chart and some of your webinars coming up. Pro35 says, question for John. Currently, what's a good commodity to set up a futures calendar spread?
Well, it depends on again, your risk tolerance. I think natural gas is one of the great markets that allows you to trade calendar spreads, and I'm assuming they're talking about in the futures market and not in the options market. But even in crude oil, you look at like December or June contracts. You look at how wide they are right now. So there's a lot of opportunity even in the crude oil market. But I like natural gas for calendar spreads because you have two distinct seasons. You have the injection season that runs between April and October, and then you have the demand season in the winter months, November through March. And so there's a lot of friction between what they call the shoulder months and they're great trading opportunities. For instance, the March-April shoulder calendar spread in natural gas this year started out like around 25 cents to march over. And then when we got to the peak of the rally during the winter, I think got as high as like $1.30, $1.40. And then as we got towards the end of the season, as March started to come closer to expiration, that fell right out of bed. And it ended up coming all the way back into about 10 cents. So just to put that in a dollar value, so that went from $2,500 to $15,000 back down to about $1,000 in value. So that's a lot of volatility, and that particular spread happens to actually be one of my favorite spreads to trade.
There you go. All right, let's talk about bar chart. For those of you who know, John does a whole bunch of stuff for barchart.com. I've got the website up here. What's your latest presentation you're giving?
So we just did one today. We looked at our chart. One of our proprietary pages is the top 100 stocks to buy, and I went through about how to use the page. Next week we're going to do Fibonacci's. Fibonacci is really kind of related to Elliott wave theory, but what I'm going to do is I'm going to take out the Elliott wave theory and just look at extensions and retracements. And I know you like to use those. But also, I'm going to show a technique of how to, for instance, let's say you have one of the questions I always get from viewers is, I do a good job finding entries, or I get into a market, but when do I get out, or how do I get out, or how do I know it's the right time to get out, right? So one of the cool things that I'm going to show is using Fibonacci's in terms of, let's say, a supply zone and as a target, where we're gonna define the zone in terms of Fibonacci, and then as price enters into the zone, we'll use each of those levels. Now, the real two levels I look at is that 38 and that's 61.
Yep.
So so we'll sell on the 38, maybe sell at 50%. And sell at the 61, or what we'll do is we'll let price penetrate into our zone as deep as it wants to go. But as price, let's say, gets up to 50 or 56 or 57%, but it doesn't get to 61, well, then I'm going to use a kind of a confirmation exit, not a confirmation entry, but a confirmation exit as price falls out of my zone. In other words, if it falls below that 38, as it falls out of the zone, then that's going to be my signal to exit the trade. Or as it falls out of the zone as well, that might be a signal. So learning how to scale in and scale out using the Fibonacci is a really cool little technique. And a lot of times it really does help you save a lot of money and also increase your profitability.
Nice. Well, I've got it up there. You guys, I just put the link into chat. You go to barchart.com, and if you click on education, or just go /education/webinars, or click on tools, and then you go over here to Bar Chart Webinars. He's got a whole bunch of upcoming ones. The one he's mentioning on Fibonacci will be Wednesday, the 16th of March. That's at 11 a.m. Central Time. So what is that, 9 a.m. California time, or noon
Something
East
like
Coast
that.
time? He's got to put this.
So the other thing that, since we're plugging, and I appreciate it, recently what we've done is we started a YouTube channel, Bar Chart YouTube channel, and all of our webinars are now on the YouTube channel. So you don't have to go to barchart.com and view them. You can watch them through the YouTube channel. By the way, if you like one of the videos, give me a thumbs up. I could appreciate the algorithm build up like Merlin has on his. But also what we're starting to do is we're starting to build much shorter content where we're going to look at some timely market conditions. For instance, I just did one on cybersecurities, and I did one just recently about the different phases of a bear market. So these ones are only about 10 to 15 minutes, a lot more digestible. They're very dense. Some of them actually come right out of our webinars, or just kind of plucked out of them. But we're moving forward. We're going to start building a lot more new content in terms of what. And matter of fact, the one that is going to be uploaded, I think either today or tomorrow, I just finished doing was we looked at the wheat market.
Yep.
So it will be pretty kind of cool to watch that.
Yeah,
one.
actually, it's up there right now. It was up there an hour ago. So whoever's helping you, just put that one up. There you go.
Cool. Awesome. Yeah. So those are the two things that have really been keeping me very, very busy recent. Of course, again, every time I come on the show, I give you majorly props. I only do one webinar a week, and maybe I might do 2 or 3 of these YouTube videos a month, and you do this every day. So,
thank you. It's tough. It's fun though. I mean, look, I got a good group who keeps me going here, so I enjoy it. And plus, there's some people that you talk to markets with, and you just go, you're stupid. You're an idiot, and I don't want to talk to you anymore, And those are people I don't want to talk to, so I don't bring them into this world. And there's other people that I go, hey, I want to pick your brain. You have something of value to offer and experiences for my viewers as well. So, I think that this just gives me a venue. Now, lucky for you, bar chart's paying you, but I'm not getting paid. But I still do it because I enjoy it. But we'll see if we can get you up to doing a daily live show for barchart.com. I'm sending in my request right now.
Well, you get paid in hugs and kisses, right?
There you go. Thanks. All right, John. Hey, well, thank you so much. I realize it's been 4 or 5 months since we had you on. I'll try to get you on more frequently here. So I appreciate you coming on.
Don't be a stranger.
We won't. All right, buddy. Thank you so much. Appreciate it.
Appreciate it. Thanks a lot, Merlin.
Right. Guys, that was John Rowland of barchart.com. You can find out more information about his materials by going to barchart.com or just go to YouTube. Now they got a YouTube channel up. They got a few videos up there. There's a couple. Looks like they have some good traction. One's an hour, and most of these are going to be smaller, but there are a couple that are longer videos, which you check those ones out. You just go to YouTube, type in barchart, one word, and you'll see this little white circle here. Barchart. All right, that is going to do it for that portion. Let me see what I got. I did have some questions I want to make sure I get to. How much time I got left? Oh, my gosh, I got 12 minutes left. This is not going to work. So there was a question that came through, and I'm hoping that he's still here. And I appreciate Tom for asking Alex Nader to put question marks before his question so I could see it. I did see his question come through, and his question was, Joe signs executive order on crypto, so what will the effect be on the crypto market? Well, I think personally it's important that we understand exactly what this means, like how does this impact crypto? And I've been saying all along, especially in the CIL as I go a bit deeper there, is that I don't believe that there will be the heavy hand of government. It's just, let's get clarity on all this. And here's the kind of 6 key things that Biden put in there that I think is really important. Number 1 is investor protection, making sure that the investors are protected and all these shit coins and scams go away, or at least there's some recourse for anybody who's starting these scam coins. Number 2 is going to be financial stability. You look at things like Tether. That runs a potential risk to global stability of financial markets because of smoke and mirrors behind the scenes. So let's get clarity on what could be risks systemically to our markets, not just the equity markets, but financial system as well. Number 3 was saying, let's look at illicit finance, meaning what is being used for illegal purposes. I can go out right now and I can launder money within 10 seconds. I could make billions of dollars disappear and nobody could find where it went. In literally seconds, using a couple different sites that I talk about in my CL. Number 4 was the most important piece in the whole presentation, where he says it's really about the U.S. leadership in the global financial system and economic competitiveness. Basically what he's saying is he wants the U.S. to be the king of digital assets and cryptocurrency. So that to me says the U.S. government's going to be behind it. We'll get rid of a lot of the bad stuff, which, there's a bunch of stuff that could disappear. Financial inclusion. He wants to make it where everybody has access to these systems, and responsible innovation, meaning let's bring innovation to the United States. Let's let that create jobs for our markets going forward. So I was like, that's what I wanted to hear. It's a question of how quickly this will be implemented and what were the extent of these rules that are going to be implemented as well. So to me, that was kind of the key takeaway. Now, what does that mean? I think that that's a sigh of relief. I believe crypto has been in this malaise for months now because they know something was coming. They knew regulations were going to get hammered down on people, and I think this is more of a relief, like, okay, this isn't that bad. Now, we haven't actually seen regulation, right? We're hearing about proposals and how he wants all areas of government to work together to achieve this goal. So we're not out of the woods yet, but the framework in my mind has been set to be rather accommodative towards cryptocurrencies and digital assets. So I think that that's great. Joe actually did no harm, so that's a good thing. Yeah, I agree. I think that's a really good thing. And then the other one, yes, Big Eb, we knew that Amazon was going to split sooner rather than later. Boy, that was kind of a fun one today. They did a 20-for-1 split. Not only is that the important part, they're doing a 20-to-1 split, but they're also buying back $10 billion of their shares. Now, surprisingly, Amazon's not up as much as I thought they would be. They're up 6.6% in the after-hour session right now, and I'll go to a 5-minute time frame so you guys can see the pop. Here is extended hours trading. And there you can see the big jump up in Amazon off that announcement. Now, obviously, this is very good. It's one of those things that psychologically draw more people to buy Amazon. So presently, you look at Amazon's price is, let's call it $27.85. Well, you divide that by 20. That means that Amazon's share price, if it were to split right now, would be $139. Now, how many of you would look at this and go, oh, Amazon at $27.85, that's too expensive. I'm not going to buy that. But if I told you Amazon is trading at $139, everyone's going to go, dude, that's cheap. I remember when Amazon was $3,000. Psychology, that's all this is. You're buying the same shares. There's just more of them and the price has dropped significantly. So I thought that was kind of an interesting one. We'll probably see Amazon rally. That could actually further run these markets up here a little bit. I did see we're coming into some supply levels. People ask me, isn't this a dead cat bounce? I hope so. I hope it's a dead cat bounce and we don't get a complete reversal. I don't think we're out of the woods yet, but I could be wrong. So I've got to make sure I adhere to my stop losses as well. What else do I got? Merlin, please schedule Steve Mater. I'd love to see him on your show. I know. I'm just so busy. I never contact all these people you guys suggest. I should. It's just my fault. I know. Free trips to outer space if you join Prime. You know what? I don't even think I want. I have anxiety flying from here to Las Vegas on an airplane. I can't imagine flying into space. Like, hey, you need to land this plane right now. I got to get off this plane. No way. Okay. Amazon will pump up until the split. That's typically what happens. All right. The actual split is 7-1. No, 20-1. 20-1. Dead cat bounce, Glenn, is where you have you're in a pretty sharp downtrend, and all of a sudden you get like a really big up day, and then it continues the downtrend. And if we look at the price charts of the S&P, here's the futures. That's the ES and a 5. Let's go to a daily. Right, you can see that we're on a pretty decent downtrend here. You know, it's not overly aggressive. It's just lower highs, lower lows, and today, you know, a real rip back up. To me, you know, we'll see if it has issues right around the 20 or 43.50 mark. That's where I think the potential turning point will be at a high. We'll see what the follow through is here. How are you getting to Aruba? Yeah, I'm flying on an airplane, Margaret. It's gonna be a fun trip for me. All right, let me bring up the economic calendar because I have to get ready. I have another session for cryptos for OTA for anybody who's in digital assets. We'll be talking about crypto tonight. Here is the stuff happening for tomorrow. Here is your economic calendar for tomorrow. There is some big news for anybody who's trading the euro. They have their main refinance rate coming out. That's a pretty important number. That's going to be at 4:45 in the morning Pacific time. So that's in the wee hours of the morning, but that could have a pretty big impact. You also have consumer price index numbers reported tomorrow, unemployment claims for the U.S., natural gas storage, 30-year bond auction, and the federal budget balance. So there's a lot for the U.S., and then later tomorrow night, you'll have the British pound coming out with some GDP data. Now, on that note, I wanted to bring up one last piece here and make sure I get out of here before the hour is up because I cannot let Big Eb win again. Here is the numbers that came out. And you guys remember yesterday I was talking about this crude oil inventories number, and I thought, given what's going on in the world, I did not think we would come out at negative 1.1. I thought it would be much worse. And in fact, we were almost double that at 1.9 million barrel contraction in supply. If this does continue, those numbers should continue to rise. And when I say rise, an increasing in the miss on number of barrels, right? So this means we've reduced supply 1.9 million barrels in the United States in the past week. So crazy. Merle, what happened to your position today? Gave back a good chunk of change there, Alvin. Gave back quite a bit. Tomorrow, maybe a stop point on some of it. If I do stop out on one, it's going to be the 30 Junes that I purchased the other day. The rest of it, I got a little bit higher stop loss up there, but today definitely gave back quite a bit. But it is what it is. It's fun. What I lost on options today made up for in my crypto, so I'm kind of hedging myself there. But yeah, I gave back a good amount. Okay, well, let's see. Tomorrow is Thursday. I don't have anything for a guest. It was kind of a surprise to get John on, which I was pretty excited about. Again, guess John Rowland. If you want to know more information, go to YouTube and just type in bar chart and find some of those videos, or you can see barchart.com's got a bunch of great resources for you as well. That's going to do it for me for today, everybody. I've got to run and get ready for another session starting at 4 p.m. So I will see you all on tomorrow's show. Again, if you have comments or feedback, put them down below the YouTube video. That helps me out. And thank you. I see a bunch more people commenting down there. If you want to talk about a specific show topic, you can do it there, or go to TraderMerlin@gmail.com and email me directly. Thank you guys so much. I will see you all tomorrow.